Welcome to episode 3 of the strategy series video. In this video, we are going to break down on how to find key levels to trade. Um, that could be, it could be support or resistance if you want to call it that, or I think key levels is the more appropriate term. So how we do that, we're going to start here on a current SPY chart. We will start and look at the monthly chart, doing a top-down analysis, okay? Um, so the very obvious first level is the previous all-time high here. That's 697.50. I just marked that path for previous all-time high. All right, there's other obvious levels here, right around 610.50, 478.75. I'm a day trader, so I could care less about those levels. They're just way too far away for me to care. I will go to the weekly chart, take a look. I think my one that I got from the monthly chart is all that matters. We will head on down to the daily chart. All right, the very first things that we want to pick out when finding key levels is looking for any gaps. So we have a gap here, we have a gap here, and we have a gap down there, there, here, and here. I like to keep I color court. I do color, like whatever. I mark certain colors for certain things so I know what they are when I'm trading. I always do my gaps with a solid yellow line. Let's just get through that real quick. All right, so the next levels that are obvious, okay, we have the previous all-time high. What about the all-time high? Obvious level. Mark that all-time high. All right, and now let's just use our cursor to see if we can find any other obvious levels. We've got one here. We got 1, 2, 3, 4, 5, 6 days that really interacted with that level there. So I think it's important to grab that. There could be one down here at 681. And then the majority of finding key levels I do on the hourly chart. All right. And the very first thing that you want to do is turn off extended hours trading. We don't care about the overnight price action. That's just a lot of noise. So we need to turn off extended hours trading or extended session hours in Thinkorswim. And then from here, we can go down and find more key levels. The very first one I see from the top going down is right here. Not a major level, so I'll probably just do a dash line right about 735. Okay. Next one I see, 732. And then 730.50. 732.10 probably right there. All right. And then we will continue down looking for more levels. We've got one right here. 717. Already got this one marked. 704.65. I mean, that would be plenty of levels for now for the current trading day, but we'll continue to go down and find more. 692.50. 681.50. It might be a little higher. Go 681.60 on that one. This could, in theory, be a little minor level right here. And we've got a clear level right there. 652.60. All right, so let's just see if there's any levels in the middle of these gaps that we need to be concerned with from the left-hand side. And I think we're good. That's good for current levels on SPY. We'll go ahead and do a few more charts, and it just takes time it just takes time and practice of finding the key levels, and we'll just continue to go through it, and eventually they'll be real easy to spot out. I mean, they are a little bit more particularly easy at this given moment just because the market is in a lockout rally as I make this video. But that, as there's more price action trading over the same levels, they can become a little more difficult to find. All right, so we go to gaps on QQQ. Mark them yellow. And as you stay with me in my trading and learn my strategy, you will come to see these levels really work well. Okay. And I only execute at key levels. I don't execute anywhere else. And I fully believe that that helps quite a bit with my win rate and the all-time high. And we switch down to the hourly chart, extended hours off. Got a little level right here. Right here. Right there. There. Here. Obviously here. And as you can see, we have 1, 2 days that it's price stalled out there. And then the next day it came up, pulled back to that level, and bounced off of it. So that it's just a really clear level to me. It's probably a little stronger than a dotted line. Okay. This is all thin structure, not much to say about it. You could put a small level right here. And then one here. And that's more than enough. No, I don't think we need to worry about any other levels. The only thing that I would add is, let's say that when the market does open, we want to, before market open, extend trading hours, look at after hours, and see if price came out of the previous day's high or low. And in this case, after market close, it already did create a new all-time high above the previous day's close, so we would mark that as the overnight high. Then go back to turning extended hours off. Like this is a little too high. Oh, I think it's because I was on the hourly there. That's the correct regular hours all-time high. We'll do another chart. Let's do the Russell IWM, I guess. Move all these levels down here. Let's take a look at the monthly real quick. Not much I want to grab from that. The weekly, I'll do it off the daily. All right, previous all-time high. Current all-time high. Hourly chart. Now let's get these gaps. Small gap here. Big gap here. And then after that, we will switch to the hourly chart. As you watch more of these videos, and I explain more of the strategy, you will understand why these levels matter so much. But I don't want to get ahead of ourselves. For now, I'm just showing you in these first several videos the basic concepts that you would need to have down to even begin to trade the strategy. Okay, so we will switch over to hourly. I could put a minor level here. Put a level here. Let's show a little more chart so it's easier to identify here. We've definitely got a level here. As you can see, had this bounce range that kind of stopped right about that level twice. Next day, opened right above and just held at that level. So it's clearly a level to me. And now we're back. I mean, you could technically put a small level here. And the reason I would only put one there is just that if price did come back to this level, a potential trade could set up here. Like if it got a lower high right there, it could come down and retrace back to the previous all-time high. That would be very logical price action to happen because we have all this thin structure, which price just went straight up over here without chopping. And so when it comes straight up like that, it can typically come straight back down fairly easily. Technically, you got a little level right there and right there. I always do put my levels on the candle close, not the wicks. On the hourly chart, wicks are pretty much irrelevant. I only use the close. You can see a level here. And that would be enough for that chart. So that's just kind of an introduction of finding key levels. I would suggest, hit your charts, go through that same process and see if you can find key levels. And after you mark your charts, see how price interacts with those levels the next day or the day after for days to come, and see if you've picked out the right levels. That is it for now. Like, subscribe, follow, and we'll see you in the next video.